Welcome back to the deep dive. Today we're diving into something potentially really interesting, especially if you're listening and you own commercial property. We're always looking for ways to save money on taxes. And this is a strategy that a lot of people just don't know about. It's called a cost segregation study.
Yeah, I might sound a little bit intimidating or technical,
Yeah.
but I promise you the benefits can be pretty significant. And today we're going to break it all down, make it really easy to understand.
Okay, cost segregation study. Lay it on me.
So basically, it all comes down to depreciation. You know how the value of an asset decreases over time?
Yeah, like a car. You buy a brand new car and it loses value right away.
Exactly. With buildings, though, it's a little more complicated. Imagine you own a restaurant. You've got the building itself, the kitchen equipment, furniture, lighting, all those different pieces. And traditionally, you might lump all of that together and depreciate it over a really long time, like 39 years.
Okay, so instead of looking at the whole property as one big thing, we're breaking it down into smaller pieces.
Yeah, precisely. And each of those pieces, those assets might have different useful lives. So for example, your fancy restaurant oven, that might wear out or become obsolete faster than the building itself, right? Cool.
So the oven might be depreciated over, say, 5 years, while the building is still on that 39-year schedule.
Exactly. And that's where the magic happens. By assigning shorter depreciation timelines to those assets, you can claim a larger portion of their value as a deduction each year.
And bigger deductions mean.
Less taxes. You're accelerating those tax benefits
Yeah.
and freeing up cash flow potentially in the early years of ownership.
This is why it's called unlocking hidden cash flow. But let's be real, would every property owner want to invest in a study like this up front? I mean, what if it doesn't actually uncover any big saving?
That's a really valid point.
Mm-hmm.
But a well-conducted cost segregation study can uncover savings that far outweigh the initial cost of that study. I mean, think about it. The potential to reduce your tax liability for years to come is a pretty good incentive.
It is. But before we get too excited about the benefits, we have to address the elephant in the room, the IRS.
Right, the IRS.
What are their thoughts on all of this?
So the IRS is very specific about how these studies have to be done. They want to see a really thorough engineering-based analysis, not just some quick estimate.
Okay, but why is that a good thing? Wouldn't it be easier if they were a little more relaxed about it?
Well, not necessarily.
Yeah.
Their emphasis on rigorous documentation actually reduces your audit risk. If you have a proper study that clearly justifies those depreciation adjustments, you're in a much stronger position if the IRS ever comes knocking.
So it's not about trying to trick the IRS. It's about being meticulous and transparent.
Exactly. And that actually brings us to another really important point. Who should be doing these studies?
Yeah, couldn't my accountant just handle this? I mean, they already have all my financial information.
So your CPA is crucial for navigating the tax implications. But cost segregation studies require a very specific type of expertise, and that's usually possessed by architects or engineers.
Why is that? Why wouldn't an accountant be just as qualified?
It's not just about crunching numbers. It's about understanding the physical parts of the building
Yeah.
and how they relate to the tax code. These professionals have the training to identify and classify assets very accurately, which makes sure that your study meets all the IRS guidelines.
So it's like a specialized skill set within accounting and tax planning.
Yeah, exactly.
Yeah.
It's crucial to engage those specialists, people that really know the ins and outs of both construction and tax regulations.
Okay, so we've established that these cost segregation studies can potentially lead to some significant tax savings, but choosing the right firm is really important. What are some red flags to look out for when selecting a firm?
A big one is if a firm doesn't seem that interested in gathering all the documentation. They should be digging into blueprints, construction records, purchase agreements, anything that helps them understand the cost breakdown of the property.
Got it. So if they're trying to rush the process or cut corners, that's a bad sign.
Definitely. And be wary of any firm that doesn't insist on doing a site visit. A thorough study needs a physical inspection.
Why is a site visit so important?
They need to actually see the components firsthand, take photos, verify the accuracy of all the information. It's about connecting the dots between the paperwork and the physical building.
So it's not just a desk job, it's a real investigation.
Yeah, exactly. And another red flag is if a firm delivers a flimsy study with little to no supporting analysis. A good cost segregation study should be well documented, clearly explaining how they came to their conclusions.
It shouldn't just be a one-page summary with some random numbers.
Absolutely not. You want something that feels substantial, well-researched, and clearly explains their methodology.
That sounds like good advice. We've covered a lot of ground in this first part of our deep dive. We've explored what a cost segregation study is, why the IRS actually likes them when they're done right, and some key red flags to look out for when choosing a firm. When we come back, we'll dig into some specific examples of how these studies have helped property owners just like you.
I'm excited to share some real-world scenarios, stories that highlight the real benefits of cost segregation studies. Stay tuned.
Welcome back to the deep dive. I'm really looking forward to these real-world examples you mentioned.
Yeah, me too. Sometimes these concepts can feel kind of abstract. It's one thing to talk about, depreciation and tax benefits, but it's a whole other thing to see how it actually works.
Totally. So let's make this real for our listeners. Can you walk us through a scenario where a cost segregation study made a real difference for someone?
Okay, so imagine you just bought an older office building.
Yeah.
And you're going to renovate it, lease it out.
Mm.
You've got, new HVAC systems, tenant improvements, maybe even some structural upgrades.
Sounds expensive.
It is. And without a cost segregation study, you might be looking at depreciating all those improvements over 39 years. So your tax deductions would be spread out over a really long time.
Yeah. So you're putting a lot of money in now,
Mhm.
but you're not seeing the tax benefits for decades.
Exactly. Yeah. But a cost segregation study can change that. So let's say this study finds certain parts of the building, like that new HVAC system or those fancy lighting fixtures, and those have shorter useful lives.
So instead of depreciating those over 39 years, they might fall into like a 5-year or 7-year category.
Right. By speeding up that depreciation, you can claim bigger deductions up front, and that could significantly reduce your tax liability in those first few years.
That extra cash flow could be huge for a property owner, especially someone who just put a lot of money into renovations.
Oh, absolutely. Instead of waiting decades to recoup those costs through depreciation, you're seeing a much quicker return on your investment. That extra cash flow could be used to fund more improvements, attract new tenants, or just give you some breathing room financially.
It's not just about saving money on taxes, it's like strategic financial planning.
Exactly. It's about using the tax code to your advantage, but in a smart and legal way.
Okay, so we talked about red flags when choosing a firm. What are some good signs that you're dealing with a legit cost segregation expert?
First, they should be totally transparent and answer all your questions. No rushing you or avoiding specifics.
Transparency is key.
For sure. And they should be able to explain their process in a way that makes sense to you. They should be upfront about what it takes to analyze your property.
So it's not just about their knowledge, but their ability to communicate with you.
Exactly. The best cost segregation specialists aren't just number crunchers. They're great communicators who can make complicated things easy to understand.
You want someone who's a partner in this, not just someone doing a job.
Right. You want someone who gets your goals and concerns and can help you confidently navigate all the tax stuff.
We've focused on the good stuff, but are there any downsides to cost segregation studies? Are there times when it might not be a good idea?
It's a good question. And, it's important to be realistic. Not every property is going to have huge tax savings from this. For example, if you have a new building that's already being depreciated well, the benefits might be small.
It's not a magic solution for every situation.
Yeah. And it's important to weigh the potential savings against the cost of the study itself. If the savings are small, it might not make sense financially.
Makes sense. It's about making informed decisions based on your own situation.
Right. And another potential downside is if the study is done poorly, it could actually increase your chances of being audited.
Wait, I thought you said a good study reduces audit risk.
It does, but if the study's sloppy or incomplete or doesn't follow IRS rules, it can make the IRS take a closer look.
So picking the right firm is super important.
Really important. You want someone with experience and a good reputation. Someone who consistently does high-quality work that can hold up under scrutiny. Trying to save a few bucks on a bad study can cost you way more later.
Penny wise and pound foolish.
Exactly. When it comes to cost segregation, quality and expertise should be what matters most.
We've covered benefits, downsides, picking the right firm. I think our listeners have a much better understanding of this now. But before we wrap up, I want to talk about the IRS audit process. What happens if the IRS decides to audit someone who did a cost segregation study?
Well, it's a common worry. But remember, an audit doesn't mean you did something wrong. The IRS does audits for a lot of reasons. It's basically just them checking your tax return.
Don't freak out if you get that letter.
Right. And if you had a cost segregation study done and it was done right, you're actually in a good spot.
How so?
Because you'll have all the paperwork that backs up the changes you made. You can show the IRS exactly how the study was done, how things were categorized, and how the calculations were done.
It's all about being organized and having your stuff together.
Exactly. And a good cost segregation firm will usually help you during an audit. They'll know how the IRS does things and can help you through the process.
That's good to know. Sounds like having a qualified expert can be super valuable, both from getting the most out of the tax benefits and handling potential
I
audits.
totally agree. It's a partnership that can pay off for a long time.
Well said. We've covered a lot today. The technical stuff, real-world examples, and even the IRS audit process. When we come back, I want to hear your final thoughts. What's the key takeaway you want our listeners to remember about cost segregation studies?
Welcome back to the deep dive. We've really dug deep into this cost segregation thing, and it's honestly been a lot more interesting than I thought.
Yeah, I agree. It's pretty cool where engineering and finance kind of come together, and it's surprising how many people just haven't even heard of it.
Right. Like everyone knows about depreciation, but this is like next level depreciation. So as we wrap up, what's the one thing you really want our listeners to take away from all of this?
I think the biggest takeaway is that your commercial property, it's not just a building, it's really a bunch of different assets, each with its own financial lifespan.
Okay, so thinking about a building as like a collection of individual pieces.
Exactly. And a cost segregation study helps you really understand the financial story of each of those pieces. It's like taking inventory, but not just of what's there, but how it affects your taxes over time. So it's not just about saving money on taxes right now.
Right. It's about having a smart long-term tax strategy.
It's kind of like planning for retirement. The sooner you start, the better.
Perfect analogy. And just like with retirement planning, having an expert can make a huge difference.
Right. We've talked a lot about finding a good cost segregation firm.
Absolutely. Don't try to do this on the cheap. Find a firm that has a good track record experience and really knows how to communicate clearly.
And don't be shy about asking questions. A good firm will be happy to explain everything and address any concerns.
Exactly. You want to feel good about who you're working with.
Well said. We've covered so much today, the technical stuff, real-world examples even. What happens if you get audited by the IRS?
Hopefully our listeners feel like they can really explore this strategy.
I hope so, because anything that could potentially save us money on taxes is worth checking out.
For sure. And knowledge is power. The more you know about how taxes work, the better decisions you can make for your business and your financial future.
That's a great point to end on. A big thanks to you for sharing your expertise with us.
It was my pleasure. I love talking about this stuff and helping people understand it.
And to everyone listening, thanks for joining us on the deep dive. If you have any questions or thoughts, we'd love to hear from you. You can find us on social media or shoot us an email.
We're always up for good conversation.
Until next time, keep learning, keep exploring, and keep diving deep.